Hey everybody, Jared Duckett Ladd, Dental CPAs and Advisors with my business partner, Bill Ladd. And guys, we're going to jump in and talk about some PPP2 guidance. We released a video. What was that, Bill? Last week of the year, wasn't it?
Yeah, it was.
Sent a video out, kind of hit on the stimulus that was passed and, summarized kind of PPP2, how we saw it at that time. But then as we said in that video, hey, I think, that stimulus had 10 days or so for SBA to release guidance. And now we've got guidance. So late, I guess it was late last week, Wednesday night, maybe, the SBA and Treasury released these two interim final rules. You'll hear us refer to them as IFRs, but there's two of them and they're lengthy. I mean, they're well laid out, but they are lengthy.
Yeah.
Both, I guess the first one's 82 pages, I think, and the second one's 42 pages or so, somewhere in there. And we're not going to pull them up and go over all of them, but what we've done and Bill's done really is dove into them and pull out the high points and really what we really want to talk about today. And the first IFR was really taking really the PPP1, let's say, and kind of 8 months of documentation, if you will, and guidance and kind of consolidating it all together. And they did a really good job of that. And then the second IFR really talks about PPP2.
Yeah.
And so we're going to kind of talk about them high level in general today, and just kind of scan through some stuff. So Bill, you ready to roll?
Yeah, I think so, Jared. It's kind of funny when you think back a while back, it feels like forever. We kicked off one of these by saying happy PPP Eve, night before PPP was to kick off. And that was PPP 1.0 or first draw. And then it had a little bit of supplement that came through, if you remember, all kinds of rules, all kinds of heartburn, stress, everything else. But, in a lot of ways, it really did do a good job of what it was supposed to for a lot of clients who, without that, would have been in trouble. So, it was certainly something in March was welcome. And when the stimulus bill came out, obviously, what we're going to focus, Jared, on is the second round, because most, clients we work with have already taken advantage of the first round. So, we'll spend most of our time on the second round and kind of what that looks like. It's very interesting. And like you said, the IFRs do a pretty good job of laying it out. And I think we can kind of take our time, work through it, and hopefully create some clarity.
Yeah, I agree 100%. SBA, I'll have to hand it to them. They did a good job of getting this out pretty timely. I mean, you got to think about holidays and everything going on. And then how they laid it out, it's pretty well written and we can read through it pretty well. So let's just jump in. And again, we're talking about second draw loans. You hear it PPP2, but it's actually referred to as the second draw loans.
Yeah.
And really the big thing is, I'll date this. Today's the 10th. It's a Sunday night here. We're going to blast things out, but you can begin applying for these second draw loans Wednesday is how we see it at community financial institutions. A lot of, people are saying, you can apply Monday. And I think how we read it, Bill, that might be that first round of PPP1. If you didn't get that, or you're going to change something on that. But really Wednesday at community financial institutions for the second draw.
So in our understanding, again, this is something you'll want to take by your bank, is that the community financial institution is designed to be a smaller financial institution. I believe that the threshold's $1 billion in assets, and really it's designed to really hit those people who maybe don't have access to the bigger capital. It does specifically say that some minority lending institutions and things. So it's a very targeted group that's going to hit. So obviously the recommendation there is, if you're unsure, to contact your bank and ask them. Most of them, ones we work with, are probably going to be over that $1 billion threshold. It's not a huge amount, but you won't know until you ask. So you'll certainly want to, get in front of them. And if you can, and you need to, and you feel like you should apply, you can apply beginning Wednesday. What's interesting, Jared, is if, once that 13th, the Wednesday kicks off, at some point after that, all the rest of the banks can participate in fintechs and other things, other sources, but that's not really defined that I can find. So it's kind of an indeterminate period of time that at least for what I'm reading, before other financial institutions can kick in and start making those loans.
Yeah. Yeah, and you said it, contact your lender, contact your lender, see what they say. Bankers are going to be really busy starting tomorrow. They're kind of
For
going into
sure.
tax season the same time we are, right? Into their busy
Yeah.
season. So get with your lender, ask them these specific questions, but that's how we read it from the guidance. Jump in here, eligibility. Okay. So how are you eligible? We hit this high level. We're going to hit a little more detailed points here. So the eligibility, you have to have previously received the first draw loan, okay, the first PPP loan, and has or will use the full amount for authorized use. So I'm going to say that one more time because there's key words here. You receive the loan, PPP1, and you have or will use the full amount for authorized use. So elaborate on that just a second, Bill, because those are some key words there.
Yeah, I think they are. We actually set in on a town hall with the ICPA, and they had made reference to this, that some banks may come back and say, hey, if you haven't spent all your money, you can't apply yet. Or if you haven't applied for forgiveness, you can't do this yet. The way they interpreted it, and how I would read it too, is the has or will means that even if you're sitting on some, you haven't quite spent it yet, which what that means for forgiveness, you'd have to run through the tape, but you still have the ability to apply. So realistically, when you kind of think through the clients we work with, Jared, probably most of them got it and spent it either in the 8 weeks or certainly by the 24-week covered period. So probably not a huge deal, but for some, if they have any doubt, it could be.
Yeah, and you hit it. It doesn't say you have to have applied for forgiveness on the first one. That's key what you said. So most of our clients have used the PPP funds for authorized use,
Yeah.
but they haven't gotten it forgiven, through the bank into the forgiveness process. You don't have to have that forgiven already. So
Right.
if your lender comes back and says, no, you haven't got this forgiven, ask them where the guidance is that says that, because how we see is you can go get this right now, even if you haven't gotten it forgiven. Okay, employees, has no more than 300 employees. I think we mentioned that in the last video. And here's the reduction. There's not everybody can just go get this. You have to prove that you've had a reduction in gross receipts of 25%, of at least 25%, okay, for comparable quarters from 20 back to 19. Does that make sense? So you look at a quarter in 20, look back at that comparable quarter for 19 to see if there's been at least a 25% reduction in gross receipts. And
But
then
realistically, when you think about it, Jared, March was kind of when everything hit. So that first quarter probably maybe saw a bit of a decrease, but obviously as you're looking for this metric, the Q2 would be the one, more likely not, especially with the dentists and the people we work with. Many were shut down, pretty much all of them were shut down for a different time periods, but that would be the quarter that probably most of them did experience 25% decrease.
Yeah, no, exactly right. Second quarter has been going to be the big one. And then there's something in the guidance here that we'll point out. So you're looking at that comparable quarter, or if there's you can show that there's a year-to-date decrease in revenue of 25% when you're looking at 20 compared to 19. So how I see this, Bill, and give me your input here, but maybe a taxpayer or business doesn't keep quarterly financial statements and so forth. So it's hard to go back them and show where they have that snapshot, because it's a snapshot, this quarter by quarter. So they're saying if you don't have that, you can show a year-to-date decrease in revenue in order to be eligible as well.
Yeah, 100%. I think that's exactly what it's for. It was designed to simplify. We work with clients that have good books and records, and we can see quarterly and we can track it and really know before the program starts. They do recognize many small businesses don't really keep books and records, and we can have separate commentary on that later if we wanted to, Jared, but obviously you should. But if you don't, they throw you a bone and say, well, you can look year to year. Now, the interesting thing here is what that tells you is if you're in that category that doesn't keep those books and you're going to have to look year to year, you need to get them cleaned up and ready pretty quick. When this thing kicks off, you want to be able to demonstrate that to them, and without having books and records or something tied down, I don't know how you do that.
Yeah, you're exactly right. You can't look back at no bookkeeping, right?
Right.
So we'll talk about what you need, documentation required, but that's a great point there. So we say gross receipts. You've got to show this gross receipt reduction. What does that mean? We've had a lot of questions on this topic. Particular is gross receipts exclude. Let's hit this at the beginning. Exclude, so it does not include the PPP one loan or that idle grant if you receive that, not the idle loan, but that idle grant. That was that 1,000 per employee up to 10,000. That is not included in gross receipts, as well as capital gain income. Those two amounts are not included in gross receipts. So you'll have that excluded when you're looking at that look back, if that makes sense.
Yeah, the forgiveness is for those who have applied and did get forgiveness. Some people have, under, how you do books, that loan becomes income at that point, but we know it's tax exempt and they are not intending to penalize you for that. The idle always has been kind of a point of contention. They fixed that. And through that process, to our understanding, they also allow you to back that out of, the gross receipts count. And I think capital gains is a pretty interesting one there too. Yeah. Really, in our minds, we don't really think of capital gains as gross receipts, but you could be confused if you were looking at total income or something and think maybe I had to sell some assets or something to stay afloat. And I put that in there like, uh-oh. So that was a nice clarification, I thought.
Yeah. No, I mean, it's good that they clarified that. So those are a couple of things it excludes. And so what does it include? So quite a few things, and your typical things, I'll say. So the sales of products or services, but a key here is net of returns and allowances. Mm-hmm. That is a big one there. So net of returns and allowances. You've got interest income, dividend income, rents, royalties, fees, commissions, etc. So those are what's included in gross receipts there. And then we've had a lot of questions too of, hey, Jared, what is it? Cash basis? Is it accrual basis? All good questions. And how we read it is it depends. It's based on your tax return basis. Okay. So if you're on the cash basis of accounting, that's how your tax return's kept. That's how this test will look. If you're on the accrual basis of accounting, you'll use the accrual method. So again, points directly back to your tax return.
Just clarity. It seems like every time these rules come out, there's sometimes more questions than answers, but that was a nice proactive source of clarity so that people know. And hopefully it will kind of match up to documents that the bank or whomever can accumulate, whether it's tax returns or whatever. So that was a good piece of clarity there that I think makes it a lot simpler to understand.
Yeah. And the last point here we've got written down kind of on eligibility. So several entities are not eligible. Lobbyists, those are relations to the People's Republic of China, etc. But also if a business has closed during the pandemic, if you will, it's not eligible. So a closed business cannot go get it. They have to be doing ongoing operations currently.
What was really interesting here, Jared, is this is where Congress took some of the data and some of the fraud they saw in PPP first round and fixed it. That some of the biggest fraud came from people who had closed down their business, but still had data that they could use to base a PPP calc on for phase one.
Yeah.
So they took it and come to find out their business had closed down in January before anybody thought COVID was a big deal. So they actually closed that loophole or whatever you want to call it. And again, the other ones probably really don't apply to many of the clients we work with. But, if you sold your practice or something like that, this is saying if you're permanently closed, you don't get it. But one thing's interesting, it does not apply to temporary closes, obviously,
right?
Because a lot of those are due to COVID, right? And you intend to come back. So spirit of the law, if you're done, if you close down, you can't get it.
Yeah, SBA has definitely learned their, I'll say, lessons. They've taken some notes from the first loan and how it was used to a degree, and kind of put that guidance out here already.
For sure.
Okay, loan calculation. So very, very similar, guys, to the first PPP loan on the loan calculation. So it's basically the 2.5 times that average monthly payroll for 2019 or 2020 payroll costs. So you can look at those most and see which is higher, 2020 payroll or 2019. I would say most, it's probably going to be 2019 just because your payroll probably would have dipped in 20 as your business dipped. But maybe not. I'm not saying that's everybody. But it is 2.5 times the greater of 19 or 20 payroll cost up to the maximum loan amount here, up to $2 million.
Yeah, and I think what's interesting there is, as we'll see later, if you use 19, which, as you said, it may be beneficial or very likely could be beneficial, it simplifies the documentation requirements. So we'll hit on that in a bit, but very similar to what you experienced, your accountant, your bank, you, at this point, we've kind of been through it. We kind of know how that looks. So nothing too earth shattering in this round two.
Yeah. And another key date here. So this is open until March 31st of 2021. So we got a little less than 3 months or so to kind of jump in and have this process rolled out. So, or till it ends. Who knows if that's extended, but right now, March 31st is where they're saying.
Well, and that's the $1 million question that we had at PPP round one. If you remember, there was like this mad dash, and it went pretty quickly. And then you had the supplement that they didn't expend all of it. So it's interesting. I mean, this one, I really like how it is designed to be pinpointed more to the people who really, truly do need it. We won't touch on it here, but some of the hospitality groups and, some of those that really are struggling, they actually have higher calculations and the potential to get larger loans. So I think they're really trying to pinpoint down to those that truly do need it. And they created this window that, in my mind feels like a pretty generous one, but again, you just never know how quickly the funds will be depleted.
Yeah. So the loan terms. So again, a lot of this is very similar to PPP 1. So the same general loan terms are pretty much in place. I'll just go through these real quick. So it's still 100% guaranteed by the federal government. No collateral required, no personal guarantees, and it's still a 1% 5-year loan. So same general terms there. Documentation required, again, generally the same as the first round. And Bill hit on it, is if you're going back to the same lender and you're going to use 2019, again, you have to fill out an application. We'll hit that at the end, but you don't basically have to substantiate or show documentation for your 2019 payroll because they already have it. Right. Does that make sense? So it's pretty easy. You go back to the same lender, you use 2019. It's pretty easy to, and then fill out the application, but not a lot of paperwork is going to have to trade hands there. Just looking through my notes here. So for loan, this is a big one here. For loans greater than 150,000. Okay. So if you're looking at the payroll or your loan calculation, it's greater than 150,000. At that time at the application, you must provide documentation to establish that you have that gross receipts, that revenue reduction of 25% or more. Okay. Likely, probably quarterly financial statements, something there to show where you've had that reduction. And again, there's an amount there. If it's $150,000 or more, or maybe greater than 150K, so I'm talking about $1 there, you're going to have to show that documentation that you have that reduction.
Yeah, the 150 is kind of the number they've cued in on. That's what allows for simplified forgiveness. They seem to have kind of settled on that as truly a small business enterprise that could use that. So, again, if you have a 150, a greater than 150 loan, and you do have to justify that, again, you're likely looking at showing a quarter-over-quarter financial, or again, if you are looking at year-over-year, you're going to have to show something there too, whether it's a year-to-date general ledger, trial balance, whatever it is, P&L versus the prior year. So you definitely will have to provide something if that loan is greater than 150, and you have to certify to it as well.
That's right. Yeah, it'll be in the certification. We might glance over those there at the end if we've got some time. So again, we're talking about greater than 150. If it's less than 150, okay, the documentation is not required at the time of application to show that gross receipts revenue reduction at the time of application. But that must be submitted, the documentation must be submitted prior to applying for loan forgiveness. So at application, you don't have to show them where you've got that reduction, but before you get it forgiven, you've got to provide that documentation to show that 25% or more reduction.
So, I mean, simple way to look at this is if you don't have it, you can't get it.
That's right.
You know what I mean? Don't, if you're 100, 150 and think, well, I don't, no harm, no foul, that's not how it works. This is truly for people who have had that kind of decrease in revenue. If you haven't, then you can't apply. Simple as that.
Right. You've got to have that reduction. No
Right.
questions. You have to have that reduction. Application process. So I'm going to pull up. So there is a separate form for this. Okay. So the SBA, they went out, there's a form, I might say this wrong, but there's a form 2483 that's been revised, and that's for the PPP 1.
Yeah.
Okay. Again, you can, there's funds from the stimulus that has been set aside to go, if you didn't get PPP 1, you go get it. Or some have had an adjustment to it. They did it wrong the first time, they can increase it, whatever. So that's the application form there. For the second draw loan, PPP 2 here, the form is a 2483-SD as in second draw. So I'm going to pull that up real quick. See if I can just share my screen here. All right. You see that, Bill?
Yes.
All right, let me dive in. So this is the form, and you can see I'm just going to scan down here at the bottom. Here it is, 2483 SD, and it specifically says at the top, second draw loan. Okay, very similar. There are some changes here we'll kind of look at, but very similar to the first draw loan. And then we're going to go over the certifications here at the bottom. But you can see, I was going to point it out where to go. So you can see they've added some of these additional eligible covered expenditures that we talked about in this first video. So you kind of see this covered operations, property damage, etc. So they've added that in there. Again, you've got to show the loan number of your first loan, right? You can't get PPP 2, the second draw loan, unless you got the first one and have or will use it. So you got to show that in there. Here's where you're going to put in the reduction in gross receipts of at least 25%. But you notice here in the parentheses, applicants of loans of 150,000 or less may leave blank, but must provide this upon or before seeking loan forgiveness. Most of this here is the same. Just kind of scanning through this. Most of it's the same here, just questions they ask. Now here it goes into the certifications. And again, you have to certify certain things in order to get this loan. But you can see down here, again, under current economic uncertainty, make it necessary. Here's where you're certifying the reduction. Basically, you've certified that you've realized that reduction in gross receipts in excess of 25%. So very similar, but there is just a couple changes in here. But again, make sure when you're talking to your lender, if you're going for the second draw, make sure you're using this application. And I think that's about it. I just wanted to scan through there. Perfect. So comments, feedback, Bill? I mean,
It's interesting, Jared. It's, I look at it, I try not to look at it too philosophically, but it's kind of hard not to too. You look through the lens of where we were in March versus where we are now. And it's different for every person. So, I think what we are advising our clients is that, most of them as dentists probably do qualify under the letter of the law. So you just have to kind of go in with your eyes open, run through the certifications. I always cue in on that current economic uncertainty. And it's interesting because that came out when there was 100% uncertainty and everybody 100% in good faith could sign that because everybody was terrified. But then they kind of came out with some FAQs that scared everybody to death that they were going to make you prove it out and that you didn't have other sources of liquidity. Then they came in later and gave us some much needed relief that if your loan was under, I believe, 2 million, then you don't have to, you were deemed to make that certification in good faith. Most of the guidance we're seeing on this PPP it says that it kind of conforms to a lot of those rules. But what's interesting, Jared, is that they also, in these rules, very explicitly give themselves to create more guidance and FAQs on this second round. So there's nothing to say they may not come back and address that good faith certification. So you just have to obtain all the facts and circumstances and really think it through and make sure that it's what you can do and that you're comfortable doing it. You've kind of run it through the risk factor. And if you do, I think you'll find that the process will be very similar, and probably the banks aren't going to like it. They're going to get busy, but they'll probably be a lot better at it this year. It probably will go smoother. So, each person's going to be different. And again, you just need to go into it with your eyes open. We all have learned a lot through phase one. If you can, if you qualify and you do need it, then it's a program that's designed to help you.
Yeah, no, I agree 100%. I'm going to make a point here just real quick. I think we mentioned it in the first video at the end of the year, but that this 150,000, you said they've kind of keyed in on this. Now with the stimulus that was passed, there's this simplified forgiveness. Had a lot of people that I've talked to, maybe not even clients, just other individuals, say, well, now if it was less than 150, it's just automatically forgiven. I don't have to show anything. You have to use it for its intended use. You still have to make sure all the qualifications are hit.
Right.
Okay. It's just a simplified forgiveness. They're just making it easier, but you've got to have that backup support. Okay. So just don't think it's automatically forgiven. It just makes it a simplified forgiveness, an easier way to do it. So Bill, I think that's it. I mean, hit the highlights here. It's getting ready to be a busy week for lenders, right? And
for lenders and accountants, and for business owners, we're all kind of be going through it again. And I do think we're all more wise. I think we've learned a lot of things about the program. I do anticipate it going smoother, but again, in situations like this, if you remember, there was kind of a run on the bank and it just crashed everything and kind of got off to a bumpy start. May do the same. So, we just may have to show a little patience and let it kind of work through the system for those of them who do apply. And we'll hope that the program works well for its intended purpose.
Yeah, no, you're exactly right. So call your lender, make sure you qualify. If you're our clients right now, we're double checking on our side, kind of running the traps to see the qualifications and everything there. But if you have questions, let us know. We'll be shooting more videos. It's going to get busy with new stuff releasing, and we're going to try to stay on top of it best we can. But anyway, again, I'll just say it real quick. If you haven't subscribed, this is a YouTube video here. If you haven't subscribed, subscribe to the YouTube channel, and you'll just get these automatically to your phone or wherever you get this. You don't have to see it come through an email. It's just going to be easier on you to do that. So subscribe if you haven't already. But if you guys have questions, let us know. Bill, time for a big week. Let's get after it.
All right. Sounds good, buddy.
All right. We'll see you guys. Take care.
Take care.